Welcome to our HotCopper investor event today, where shortly we'll hear from the MD and CEO of the most watched stock on HotCopper for 2024. HotCopper has Australia's most engaged investor community, whose members interact on our forums, learning about ASX-listed stocks and other investment options and themes. Of just over 2,120 entities that are listed on the ASX, the most watched stock on HotCopper for 2024 is Strike Energy. Now, Strike, ASX code STX, is a Perth Basin gas project developer. It's had more than 6.59 million views on HotCopper in 2024. In second place was Buy Now, Pay Later stock Zipco, viewed more than 6.2 million times. And third was Mesoblast, a company developing treatments for inflammatory diseases. It notched up 5.5 million views. Also on the top 10 list is Melbana Energy, Imugene, Liontown Resources, Raiden Resources, Invictus Energy, Summit Minerals, and Larvotto Resources. Now, we're really excited to have the MD and CEO of the top watched company, Strike Energy, here with us today. Stuart Nichols, welcome.
Thank you for having us.
So why do you think Strike's story continues to gain so much attention from Australian investors?
I think we offer a very unique and competitive investment proposition to current and potential future shareholders, where we're not only Australia's most active explorer for future natural gas supplies, but we've also been a very successful developer and now producer of natural gas, having brought online the first greenfield gas project in Western Australia in over a decade. Outside of that, we continue to break technical and operational feats, drilling the deepest well ever drilled in Australia's history and making a major gas discovery there this year. And we've recently also integrated some of our gas resources directly into power. And so we are a major participant in the state's energy transition, and I think a fantastic opportunity to see the company grow from here.
Now, of course, Strike got off to a flying start in 2024 in the wake of huge deals being struck over Perth Basin assets, but it took a hit on news of one dry well in February, and that seemed to really rattle the market. Since then, there's been a flow of better news, but investor caution has remained sticky. Stuart, is it time to move on from that?
Yeah, absolutely. There can't be a straight line to success or 100% success rate. So we have had our earlier issues this year, but since that time, we've delivered an absolutely amazing amount of great news. Not only have we made 2 new gas discoveries, we've taken a final investment decision at one of our flagship development projects at South Erregulla. We've maintained our status as a new producer with 99% uptime, shot hundreds of kilometres of new 2D seismic, and continued to honour our fast-moving and entrepreneurial background. So it is really time to see we're doing our job. It's time for the stock market to start doing it.
Well, you mentioned there that you've recently taken that final investment decision on the South Erregulla project. Now, that's despite the appraisal well that caused the share price pressure. Can you tell us a little bit more about the pivot into power and why investors should perhaps take some notice?
We realised that we had these interruptible gas supplies sitting inside of the Southwestern Connected System, the major transmission network of the West Australian metropolitan area here. And we're able to deliver one of the lowest cost, fully integrated supplies of gas-fired electricity, peaking electricity to complement intermittent renewable energy, which we're seeing being rolled out in a major fashion here in WA with huge amounts of solar and wind. The state government also is looking to exit coal-fired power, and that's creating a choppy and volatile pricing environment for electricity, where converting our gas into electrons will ultimately allow us to generate a much higher look-through realised price for our underlying resource. So it's a fantastic way to produce a smaller amount of gas into a much larger amount of value, and also be a participant in the state's energy transition.
Well, we do hear an awful lot about East Coast energy shortages. Should there be more attention nationally on the WA energy story?
In West Australia, like every other jurisdiction on the planet, and like East Coast of Australia as well, we have gone through an extended period of time of underinvestment in energy, and that is going to result in a shortage of supply of current conventional forms of energy in the latter part of this decade and into the 2030s. I think we all want to see a lower carbon future, but that lower carbon future needs to be underwritten by a reliable and stable energy landscape. Everyone needs natural gas to be an abundant, competitive, and source of energy in order to support that energy transition that every state in Australia is pursuing, as well as governments around the world. Strike's been drilling in a counter-cyclical manner, and I think that what we've seen play out in the east coast of Australia will only be arrested in WA through the success of companies like Strike.
Okay, well, before you go, if you could give one message to the investors here on HotCopper today and potential investors, what would that be?
The company remains considerably undervalued based on the transactions, the $4+ billion of M&A that we've seen in the last few years in the Perth Basin, as well as Strike's ongoing success. Supported by our major financing partners at Macquarie with our $217 million facility, we intend to develop our assets and bring on major cash flows from 2027 onwards, which is a really exciting time to get on board this story today.
Well, we'll all look forward to watching it closely. Stuart Nichols, thank you so much for joining us for this webinar today, and congratulations on your enormous HotCopper audience. Now I'm going to introduce my colleague, Tim Sylvester. He's HotCopper's head of growth, and he watches the investor trends on the platform closely. Tim, in that top 10 mix, there's gas, there's buy now, pay later, there's biotech companies, some lithium-focused companies, and a gold antimony play there too. Does the spread surprise you?
Hi, Sonia. Yeah, thanks for having me on today. No, not at all. That spread doesn't surprise me whatsoever. Couple of observations. You've obviously got some of the previously very hot areas of the market from the last couple of years being two scenarios being buy now, pay later, and obviously lithium. So those stocks are naturally going to have a fairly large audience that's accumulated over time. And then moving into a couple of newer, warmer sectors like particularly antimony is the one that I'll mention there. So a lot of eyeballs are starting to move into those stories and watch them closely as well. So no surprise on the spread, but it's all about if an investor watches a particular stock, the viewership doesn't particularly change if it's quite sought after, but the discussions we see evolve over time as well.
Well, Tim, number 2 stock Zipco recovered in 2024. It lifted about 500%. Number 3 stock Mesoblast was up nearly 430%. Gold antimony company Larvotto is up nearly 650%. Summit's up more than 50%. So there's some winners there. But equally, Strike's down about 50% in that time, as is Liontown, Invictus and Melbana, even more so, down about 60% there. So again, it's a real mix of winners and losers on the market. So what do you see as the secret to capturing so much investor attention? Does it come down to the regularity of news flow?
So that's an interesting one. Highly watched doesn't necessarily mean highly participated in. So probably a good example would be, I'll go back to Zipco. It seems to be popular and it's going to be mentioned a few times. A lot of investors have been watching that this year. Again, the narrative has changed and they're focused on where's the upside going from here and then where is the risk factored into at this point in time. But when we look at an effective strategy to capture investor attention, it's not just about the news flow. It starts right at the top with awareness. So as long as there's sufficient awareness of your particular company, and if you look at the market on HotCopper, 7-odd million investors visiting it every year, you would probably assume that up to 90% of that marketplace aren't aware of any one particular company at one point in time. So that's where it starts from. A proper awareness campaign to eventually educate investors effectively over time and then engage them effectively into their first investment decision, whether it be yay or nay for investing in that particular company or a continued investment into that company, holding the stock over different market cycles.
Well, thanks, Tim. Let's go to Finola Burke now. Finola is the MD of RAS Research Group, which specialises in small and micro-cap company research. Finola, what are your thoughts on that top watched stocks list?
Thanks for having me on today. Look, I think where we like to focus is on the small gas space, and to get the attention of the market. Well done to Strike Energy for being most watched on HotCopper's list, and for Melbana making top 10. We think that's obviously portending to what 2025 will, will theme to 2025, the energy transition and the role that gas needs to play in that space. But just on Stripe case, you think companies should get a big tip for production, lowering, delivering it by South Ella peaking project, progressing this Arugala gas project. And some of this market has priced in. I think, while the stock is down, but it's still come back a bit. But when we look at where consensus is, and consensus is looking for 28.4 cents the price this year. And the stock's at 20 cents. So there's still a bit of upside there.
So we're going to move along to John Forwood now. He's the Chief Investment Officer from Lowell Resources Fund, which has held positions in some of these companies, namely Melbana, Liontown and Larvotto. John, does the amount of investor interest in these companies come as a surprise to you?
Look, it was a bit of a surprise at first, particularly Melbana. But then, having listened to what Tim said and thinking about the news flow of those companies, it does make sense. I think, say in Melbana's case, they had, a sort of mixed news flow during the year. They're on the verge of becoming a producer, but they've also had a well that had some issues, an oil well that had some issues that didn't flow as they hoped it to. So that sort of thing obviously generates discussion and interest, I guess. As Strike has experienced. The path to success is not smooth. You don't have 100% success. So two steps forward, one step back. And I think that generates interest and discussion. It might not all be completely positive, but I think it makes sense. In Larvotto's case, though, I guess they've had a stellar year. I was just talking to the chairman last night over drinks, and he said this time last year, market cap was like a tenth of what we are now, and we didn't know how we're going to raise any money. And, it's just been a fantastic year for those guys. So they're on top of the moon. So there hasn't been too much controversy with them. It's all been positive, and fingers crossed that continues.
Well, if we hone in a little bit more on Larvotto there, as I mentioned, that return, 650% over the past year. It did a $30 million capital raise last week, and that didn't seem to hurt it too much on market, and that's in order, of course, for it to run 5 drill rigs on its Golden Antimony project in New South Wales. What's your take on that plan, such aggressive drilling and exploration campaigning?
Yeah, look, they're sitting on a lovely resource of, I think, 1.7 million ounces of gold equivalent, gold and antimony in that, obviously. But it's obviously a very well mineralized part of the world. The geology looks really good, and they have been producing some really nice high-grade hits. So I think the market, really likes the potential for them to produce more and add to that resource. And I'm confident that they will. So, they've got a 2-pronged approach. They're, progressing their exploration, adding to the resource. At the same time, they're working on the feasibility study, which I believe should be finished next year. So, while they're working on the development, I think it's always important to provide that upside excitement by keeping on exploring. So it's the best strategy.
Well, thank you for that analysis, John. Let's move along now to the most discussed stocks. So this is companies that receive the most user posts or comments in HotCopper forums. The most discussed stock of 2024 is Buy Now, Pay Later, Play Zipco, which is ASX Zip, with nearly 34,000 comments on HotCopper. In second place was BPH Energy, with about 32,000 comments. And third was Imugene, with about 31,660. Others in the top 10 were Liontown Resources, Sayona Mining, Mesoblast, Pilbara Minerals, Brain Chip Holdings, Invictus Energy, and Spender. 4 of the companies we're discussing here made both the most watched and the most discussed lists. They were Zipco, Liontown Resources, Mesoblast, and Invictus Energy. Tim Sylvester, what are your thoughts on this list?
We're going to mention Zipco a number of times if that's the case. But again, to my earlier point, no surprise at all. Heavily watched doesn't necessarily mean heavily participated in, but heavily watched does often mean heavily discussed as well, in particular when we're talking about HotCopper. And we do see that data quite regularly. So there's a fairly common theme with if there's regular traction moving through into a particular company's viewership, the discussion naturally increases and then it can evolve over time as well. But yeah, no surprises. To be honest, I thought we might actually see more overlap when it comes to the most discussed versus the most watched. Surprised it was only 4.
Well, while Zipco, going back to Zipco again, has a $4 billion market cap and shares above $3, just behind it in second place is BBH Energy, and it's only a $13 million market cap company with 1 cent shares. That's a massive discrepancy, to say the least.
The only conclusion you can probably draw from that is take share price aside, take market cap aside. What's one commonality between those two companies? And it's probably external headwinds that have affected the share prices of both the companies. So Zipco, it's obviously the well, how would you describe it? The phoenix that's risen from the ashes of the buy now, pay later sector. And then you've got BPH Energy, which has struggled with all the PEP 11 issues rather. So doesn't matter if the market cap size, doesn't matter share price or anything like that. Industry agnostic. It's all about with those two big companies in particular. I think all the external influences driving the discussion into those stocks as direct recipients of the action being taken externally.
Finola, what would you add around that list of companies and what Australia's biggest investor community is watching and discussing?
One that I would point out is Spender. We have previously written research on Spender, and I think they've done a lot in the last 12 months. I'm not surprised that they've made it to the list. I mean, they've made an acquisition in September of LimePay to round out their tech stack. And they've really, the strategy they started talking about a couple of years ago when we were covering them is actually finally coming into play. And you're seeing that come through in their numbers with some really nice SaaS revenue growth. They still have a long way to go. They're still not they're still not generating a profit, but they're certainly growing rapidly. And I think that's why you're seeing your audience honing in on them. So there's one probably to watch in 2025, if not, and discuss, and if not, investing at some point.
Well, I think it would be really useful to our investor audience to understand what some of the fundamentals are that you look for when you're analysing companies.
Look, in the first instance, we look for companies that are at that inflection point. We think it's really important, and it's not always easy to gauge when it is, but when a company's gone through a major transition or has come from a very early stage company and moved through its life cycle, we look for those companies that we think are actually close to profitability. And some of the other things we look at are obviously management. I can't stress enough how important it is to have a really good management team in place, and a management team that says what does what they say they're going to do and delivers on what their forecasts are. The other things we look for are strong cash flows, and and ultimately we'd like to see them in a profitable position.
Well, now let's move on to talk about IPOs. There have been only about 25 in 2024, with just a small handful left to go for the end of the year. Now, that's far less than the 44 in 2023, which was already a low number, and it's very low when you consider that there were 104 IPOs in 2022 and 241 in 2021. Finola, what does it mean for the market in general when IPO and capital raising activities are low?
Well, it doesn't generate a lot of interest, unfortunately. But I think what we have seen, while the IPOs have been low, what we have seen is green shoots, particularly on the secondary market. So the last 6 to almost 12 months, we have actually seen an improvement in secondary offerings. So companies coming back to raise capital. Some of them are coming back and raising it at a discount, but they are getting away to those raisings. We've seen it within our own group of companies. A number of our companies, like Amero, for example, has been back to the market twice this year. and raise successfully. We've seen Pioneer Credits just raised another $10 million. And we're seeing a lot of interest from the institutional market for those secondary raisings. I think that's a driver ultimately of, when there's confidence in the secondary market, I think that's when you start to see an improvement in the IPO market. And I think the other important thing really is how this year's IPO market has gone. We've had some real successes like Guzman, but Cuscal's been a little bit more recently. It's been a little bit soft. But if you see some of these getting away at good premiums, I think you'll start to see that drive into the next year's market. 2025, certainly there's certainly a backlog of companies that want to come to the market. I think Forwood's recently had an IPO day and showcased a number of companies that they think will come to the market next year. You've also got a lot of companies owned by venture capitalists and private equity, which may well make their way back around. And one that came off the bourse a couple of years ago, Legend Corp, is sort of waiting in the wings to come back into the market in 2025. So you may see a pickup, hopefully, and with that, obviously that's going to generate more interest in the markets.
And certainly we were lucky to be involved with some IPOs too this year that were highly successful, Blink Lab, Infini, Sun Silver. So there have been successful IPOs. John Forwood, have you got anything to add to that?
So we focus on resources solely. The trend in resources IPOs has actually been up. I think there was hardly, there was rare as hen's teeth last year, hardly any. But there's been about 10 resources IPOs this year out of the 25 that you mentioned, I think. And yeah, it's sort of half and half in terms of how they've ended up trading. So you mentioned Sun Silver. I think that has been the best resources IPO of this year. And there's been a number of others that are still trading well above their IPO issue price. But by the same token, there's been a number that are underwater. So it is mixed, but certainly in resources land, better than 2023. We at the fund do have some seed investments, and we've actually had a number of them that have come to market this year, either through IPO or some other liquidity event like a reverse takeover. So that's been a lot more than last year, and yeah, hopefully that trend continues, and the aftermarket is more positive in 2025.
And John, talking trends, we watch commodities go in and out of favour. Will uranium surge again in 2025? Has gold peaked, and will lithium stage a comeback in 2025?
That's a lot of tough questions. Look, the fundamentals for uranium remain excellent. And I think, the build out of nuclear reactors in China and the under contracting, if you like, of utilities globally means that, uranium price, the pressure could well be to the upside. So we've had a pullback from $100 odd a pound earlier this year to around, $77 to $80 US a pound at the moment. I think, the other factor is, the curtailment of supply, bans on Russian enriched uranium, problems in Niger, for example, which has produced about 4% of the world's uranium. So yeah, I think both supply and demand, are sort of indicating that the market could get tighter. Gold, look, that's a great question. We've hit a number of record highs in US dollar gold in 2024. Post the US election, there was a substantial pullback. I think fell 8% in 24 hours or something. But we've seen it start to climb back. And last night, really good price action there. So I think indicators are pretty positive. The major buyers have been central banks, and they are going to continue to buy. In my view, I think the factors as to why they've been buying, haven't gone away, and perhaps they're even getting even greater. And then lithium, look, it's been a very tough year for lithium. In the resources sector, the share prices of lithium companies have been hit the hardest of any commodities sector on the ASX. So look, I think we have found a bottom, but consensus is generally that things will probably bump along here for the best part of the next 12 months, and analysts are looking for hopefully an uptick, late, so say this time next year. So I think lithium market is small, and it's easy for it to swing from oversupply to undersupply and back again. Currently we're in oversupply, but that's rebalancing. There's been cutbacks in production, particularly in Australia, which is the largest lithium producer. So that will eventually start to take effect. As I say, the cure for low prices is low prices. So at some point we'll start to see an uptick.
Now, while I've got you here, John, I'm going to throw two more at you that I should have mentioned: iron ore and copper.
Look, yeah, iron ore's, just been discussing it in the last 24 hours. A number of analysts called for iron ore to be significantly lower in 2024, but I don't know if you could say it's defied gravity, but it's certainly held up well above $100 US a ton. For the majority of the year, it's at $105 a ton when I last looked. So that's a very healthy price. And look, I think China is the biggest off-taker of iron ore. And I think it indicates that perhaps the Chinese economy is not as sick as you might be reading in some of the news reports. So that's a positive. It'll be interesting to see as Simandou in Guinea ramps up. That's a Chinese/Rio Tinto joint venture. The biggest and the best new iron ore project in the world. Will that have an effect on the iron ore price? Possibly, and that could start to happen over the next 18 to 24 months. Copper was the market darling of 2023, and it's really sort of been fairly flat this year. And I think projections have been pushed out for the supply squeeze not to take place in 2025. BHP has said we think it's going to be a 2026 story, but I don't think it's gone away. So yeah, look, I think maybe we'll see it trade sideways for most of 2025, but we could see some real price action, more price action in 2026.
Thank you so much for that, John. Now, Finola, what would you add there? What do you think will be hot next year?
Well, a few sectors. Firstly, just following on from John on the resources front, we do see companies playing to that whole energy transition play, particularly companies that can supply into the East Coast gas crisis that we're going to have. So Empire Energy Group we see as one. They'll be up and running with their pilot gas plant, and so putting gas into the system from probably mid to late next year. Central Petroleum, which is also in the Northern Territory. We cover Empire Energy. I own some. Central Petroleum we don't cover, but we also see that as a potential beneficiary and one to watch for 2025. On the tech farm, we have a lot of tech players that we work with, but I think that continued companies that are disrupting and truly changing work practices is going to continue to be a major theme into 2025. Some of the companies that we do cover at Worker, Kinetico, we don't cover AI media, but that's truly disrupting in their space. And some other companies that other sectors we do think that will do well are the companies that are actually focused on the US market and are beneficiaries of Trump's "Make America Great Again" strategy. So one we cover, one I own, is Amero International. We do think that they will be a major beneficiary, but also some of the other players in that space, like ANL3D, which we have previously worked with, Pointera that we work with, and cover. some that we don't. Imperio Next, another one that potentially the beneficiary there. So there's the three themes that we see coming through into 2025.
Thank you so much. Now, Tim, you join me in meetings with company leaders every single day. Given those discussions, but also with the activity we're seeing on HotCopper at the moment, where do you think we'll see more profit taking or rolling out of sectors, out of stocks? And where do you see those investors doing that, moving their capital?
Luckily, I got to follow John and Finola on this, and I far be it for me to disagree with what sectors they think will perform and underperform. But the beauty of HotCopper is we have access to so much data, so we can actually, with as much accuracy as possible, help to predict where investor eyeballs are going to go based on now past performance is no indication of future performance, obviously, but we often see a trend where things that are looking toppish, or industries, asset classes that are looking toppish, we start to see a roll effect purely from the change in audience numbers and interaction on those forums. Now, John mentioned gold, and his opinion is it's going to keep going up, and we haven't seen the top. And I would tend to agree with John in that instance, but that's not necessarily, we won't necessarily not see a roll out of that, those particular stocks into others. And on the other side, you've got the impatient capital or the bored capital that's going to start to roll the other way. Best way to make back a capital loss is with a capital gain, obviously. So those lithium stocks, those buy now, pay later companies that haven't recovered, will see capital roll out of those into the more prevalent spaces that are coming up, like uranium and a few of the others that are coming up over the next 12 months.
And of course, Tim, we're going to be seeing firsthand how demand lies with our new deal room capital markets transactions arm that was launched just about a week ago.
We're working very hard to get that off the ground. And I think I explained in a previous interview, we viewed this as something that just needed to happen. We get so many investors visiting us every year. It made sense to then be able to offer them the capital raises that these companies are putting on and access these deals throughout the course of the year. Very fast start. We've had well and truly over 1,000 investors sign up already, and we're looking at an audience of give or take about $250 million in investable capital that's looking to move into these types of transactions next year. So very exciting for us, very exciting for the companies we work with, and obviously very exciting for the investors that are going to have bigger access to these sorts of transactions.
Yeah, we're looking forward to bringing those opportunities to our audience. Well, it's nearly time to wrap up this session. But before we go, John, if you could deliver a message to investors for 2025, what would that be?
There's some really interesting commodity opportunities that are going to be presented. We are seeing, after a very difficult, probably the best part of 5 years in particularly the junior resources space, we are seeing some incipient return of interest to that end of the sector. And I think that if there's even if there's a small reallocation from generalist funds into the resources sector, we'll see some significant upside across the board. But as mentioned, there's a number of really interesting commodities within the sector that are worthy of quite a bit of examination.
Thank you so much. Finola, what would you add?
Oh, thanks, Sonia. I think investors are going to start looking at where they can find real value. And I think, and certainly what we saw out of the last reporting season, while it was a few months ago, what we saw was that the smaller end of the market, particularly companies that we're working with and covering, were actually delivering excellent results. So, the businesses are in much better shape. They've come through the toughest market they possibly can come through. Costs are out. There's growth, there's strong growth there, and yet they're trading and they're profitable. Yet they're trading on the lowest PEs you could imagine. And yet the bigger end of the market, so we're talking small caps, smaller micro caps. So the smaller micro caps, we think there'll be a rotation into that space. And we're already seeing that from institutions. There's a lot more interest in the smaller end of the market because the big end is looking very, very expensive. The results aren't as good. They're sort of ex-growth, a lot of them. So we do think that there'll be that rotation next year. So I think that's something that people should look at.
Well, thank you so much for your insights today. Finola Burke from RAS Research, John Forwood from Lowell Resources Fund, Tim Sylvester from HotCopper, and of course it was great to hear from Stuart Nichols from the 2024 Most Watched Stock Strike Energy. From all of us here, we wish our valued HotCopper users a happy break from investing, great festivities with friends and family, and we'll look forward to bringing you more content that matters in 2025. I'll see you soon.